Hi friends, we'll continue with the topic 8 today. That is about letter of credit, okay, also known as documentary credit. This is a part of Patwari Academy's endeavor to make the students learning about the various parts of the trade finance. Topic 8, trade finance, letter of credit. So what we have seen over this last so many sessions that there is always a risk on the buyer that he may not pay, and buyer always worried that whether the exporter will export the goods in time when they need it. So this mistrust, basically there is a mistrust between the seller and the buyer. Seller always worried that if I ship the goods, will you pay? And buyer is always worried that if he pays, will you ship the goods? Especially because he needs the goods in time. So what the buyer gets the protection is through issuing a letter of credit is to get the goods in time. And this mistrust is solved by issuing a letter of credit by the buyer's bank. So what we have seen in this chart that as per the agreement, and if the buyer, which is known as an applicant as per the part of LC, he makes a request to his bankers, and then in turn the LC comes to the beneficiary's bank or some other correspondent bank, and then it goes to the beneficiary, that is exporter. So as per the UCP 600, the definition what we have seen is the letter of credit is a sort of guarantee issued by a bank on behalf of the buyer, that is applicant, favoring the exporter, supplier, beneficiary, undertakes to pay by authorizing another bank, okay, negotiating bank, to pay on complying with the terms and conditions of the LC or mentioned therein. So they have to present the compliant document. LC also deals in document, also known as documentary credit, because bank says we deal in documents, not in goods. So if there is an issue between the seller and the buyer, that has to be settled with reference to the quality of goods, wrong delivery of goods, whatever it is, that has to be settled between the seller and the buyer. Bank is not going to get yourself involved. They are only interested in the document. And each LC should have the clause like clause like UCP latest version, or olden days they used to say LC subject to UCP DC 600 2007 revision as per ICC guidelines. So it's very interesting, all the countries who are subscribing to this WTO and ICC, they are all covered under this. There are very few countries who are not part of this. So some countries, those are not part of this, they can use this format or some other kind of format like Libya and all. They are using it for this kind of LCs. Even like Russia also, I understand, they have made it some SPMFs and all like this. So what is happening in this case? So it's a sort of guarantee given by this bank on behalf of the buyer, favoring the seller, that saying that in case you comply with the terms and conditions, the LC, I will pay. So how he has to comply? He has to make the shipment of the goods. He has to make the presentation of the document to his bankers or the bankers nominated by the issuing bank. So generally, the advising bank could be his bankers also, possibly, right? Then once they present the documents, the bank becomes the negotiating bank. Or if this bank is instructing this bank to confirm the LC, then this bank becomes the confirming bank. Confirming bank acts like a issuing bank. They step into the shoes of issuing bank. So let us see what are the other, this you can see the another chart also. You can look at this here as per the contract. Okay, the applicant makes a request to open the LC to his bank, and bank issues the letter of credit. In turn, the LC comes to the beneficiary, that is the seller. And then what the LC does, then he does, he makes the shipment, and then he makes the presentation of documents to his bankers, and document goes to the issuing bank. They present the documents to the buyer, applicant, and then in turn they release the payment, and then they go and take the delivery of the goods. This is another way of understanding. So the four parties are very important. You must go through all these things. Understand what they do, the issuing bank, the bank who issues the LC, advising bank who advises. They act like a post office. They have no responsibilities, duties, except to the effect of collecting the charges. Right? So, but there is a nominated bank, the bank who will be nominated, where the LC will be restricted for presentation of document. Or a confirming bank, the bank who adds the confirmation. They step into the shoes of the LC issuing bank, so that then they become like a LC issuing bank. This happens, what happens? Generally, there is always a risk you are feeling that they may not, what happened? They may not pay, but they always have a worry that you may not export in time. So LC serves both the purposes. It gives a sort of security to the seller that, okay, that in case you present the compliant document, I will pay. And here he is assured that if he doesn't export the goods in time and present the compliant document, he will not be paid. So simple it is. It's a very interesting part of it. Okay. Basically, in terms of UCP, there are basically one type of letter of credit which is used. One is irrevocable. All LCs are supposed to be irrevocable. Means what? It cannot be cancelled or amended or changed by any party without the consent of all the parties. Suppose you wanted an LC for $1 million and LC has come for $100,000. So you have to make a changes, amendment. Then you have to request the buyer. Buyer has to go to the issuing bank. Issuing bank will send it to advising bank. And then the amendment will be or changing the address, name, amount, description of goods, whatever it is. All parties have to agree. So it is irrevocable, which cannot be changed, cancelled, or amended without the consent of all the parties. So it's like a check. If you find a check, what happened? You find a check is a check. But there are many different types of checks which are used. Same thing is there are many different types of LCs are used. Like LC could be a confirmed LC, which has been confirmed by the bank in India or some other country. So which can be in the bank, could be in the bank of the exporter country, or it can be a third country. If suppose now this bank should be willing to take exposure on the issuing bank. Suppose this bank is in Nigeria or some African country, then LC will be confirmed by some bank in London or Europe or Frankfurt and all, right? Okay, so it depends and it is acceptable. Transferable. Like suppose let's take that this exporter in India, he gets the LC and he's not an actual exporter. Exporter is somebody else. Then he can transfer the LC. Like for example, say $1 million LC, he can transfer for $900,000 and $100,000 may be his commission. So this part will be done by the advising bank. They will transfer for $900,000 and then they will present the documents to the advising bank, okay, who has done the transfer. A beneficiary will make his invoice for $100,000, total $1 million will be presented to issuing bank. It will be presented to the applicant and the payment will be released 900 to this the person who is the new beneficiary. And the beautiful part of confirm the transfer LCs, it can be transferred to as many people. It can be transferred to 1 people, 2 people, 3 people, but they cannot transfer back to the beneficiary, original beneficiary. They have to use it or allow it to expire. Now, there could be another situation there is a back-to-back. Suppose you don't want to transfer the LC because the buyer, the supplier comes to know the buyer. And there is a possibility that you may miss the bus. You may miss the contract, the buyer. So what happened in that case? You ask this bank, advising bank or his own bankers to issue another letter of credit, domestic LC, based on the LC received by them. Because generally whenever an LC is issued, either bank takes 100% margin or takes some collateral by giving a non-fund limit. And some generally it is 80-20, 80% non-fund, 20% margin. And here this can become as a collateral for issuing another letter of credit, and that is called a back-to-back LC. Now, then what happened? What are the other types of LCs which can be used like a revolving? Okay, so back-to-back revolving, which can be used again and again. Like normally you have one buyer who has got so many orders, right? So you can have one LC for like say instead of having 10 LCs for 10 orders, you can have one LC for one order like for $1 lakh, and then you can use it for 10 orders for 100,000 each and dollar. It's a very flexible. It can be cumulative, non-cumulative, very fantastic. I tell you, standby. Is used like in America earlier. The banks were not allowed to issue guarantees or take guarantees. Then the banks started using standby LC, for issuing the guarantees in America those days. But now this has become very popular, especially in Europe and other countries. People love to issue standby, and because it can be issued for a longer period, and then you don't have, then it replaces the revolving letter. The other could be like red cross. You can provide the advance. The beauty of LC is that it can provide you all the types of payment, advance payment, side payment, deferred payment, right? It's a very beautiful part, a combination of all three payments. So this kind of security, which no other, paper can give you, what LC provides. The next is restricted. LC can be restricted to somebody else. It can be for a longer period, deferred 3 years, 5 years, 10 years. So you must check these checklist when you get the letter of credit, and we'll continue with the checklist and with a copy of the letter of credit in our next presentation. So kindly note that LC is a very beautiful thing, which is very widely used between the seller and buyer and acceptable. Okay, and only one type of LC is there, which is irrevocable. Rest all are the additional benefits which are available in the letter of credit. Thank you very much.